going to be live in a couple of seconds. Oh, stop. No, 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 no. We're going to be live any second now. Any second now. Stop recording in 3, 2, 1. Here we go. Alrighty. So, Brandon's here. Hey, Brandon, how's it going? Lucky Larry's here. Look at this. Bobby's here. PV's here. Good evening, everyone. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Take you along for the ride for a safe, predictable, consistent 1% per week. Simone, how are you doing? Nah is here. Nah. Lucky Larry, how's that Ford trade working out? Oh, I'm a little unhappy with that Ford trade. I did a Ford trade really quickly this morning. It didn't quite work out the way I wanted it to. Actually, I did it last night, and it was supposed to fill at a nice percentage, but apparently when the market opened this morning, the numbers were all jumbled around, and I didn't get what I thought I was going to get. All right, so my hair's a mess. It's almost time for a haircut. All right. All that being said, it is what it is. YB795. How are you doing today? Mr. Wade is here. Wade, how's it going? Tried to call ya, Bama Redneck. Well, I have my number available. Hey, Doc's here. How's it going there, Doc? Let's jump in and see where we are, see where we're going, and it is a Friday. Ford, you want to go over Ford? All right, let's do some Ford. First thing this morning, or first thing this evening, Ford. Oh, I hate that damn air conditioner. Right underneath the air conditioner vent. I'll have to turn the damn thing off. Alrighty, so let's take a look at Ford. First thing on the list today. Ford Motor Company's been in business since the early 1900s. Take a look at the stock price at this moment in time. It's $11.20. Now, if you want to jump into it first thing Monday, what can you look to get? Well, the 1150s are going for, well, sorry, those ones expired today. Right here. The 1150s are going for 9 cents a share. Not quite what we're looking for. Aladita. Yeah. Okay, sorry, don't know who you are, so I'm not going to invite you onto the live only because I don't know, and it is what it is. Coffee break logistics. How are you doing today? Can you tell us your history of getting 1% weekly? How long have you been getting that return? For a little over 15 years. WBA called earlier. Alrighty. I have a spam filter on my phone, so everything goes to voicemail. So that's why I tell you, send me your number. I will give you a call. If you get sent to my voicemail, leave me a voicemail and I'll call you back. Most people just call and hang up. So I never call back. That's just the way it is. All right. So Ford didn't do what I wanted it to do. Last night when we were looking, the numbers looked really appetizing. And I did the math, and it looked like a really good trade. But when she filled this morning, not so much. Anyway, neither here or there. 1120. The 1150 is going for 9 cents by 10 cents, not quite 1%. And she did gap quite a bit down. She did go up a little bit today, not a huge amount, but up is up. Miss Sheila, how are you today? Alrighty, that being said, let's keep on moving forward. Ford, for the last 30 days, 30 days ago, we opened up, what is that, 1201, 30 days ago. She shoots on up. Let's get this thing here. 30 days ago, here we are at 1201. Shoots on up to the 30-day high at 1486, and then just drops. If she drops from, what is that, 1375 all the way down to 1119. Wow, that's a big drop. Because it's a $11-12 stock. I mean, of course it's a big drop. Anyway, that being said, I don't really like the numbers for Ford. I did jump into Ford this morning. I did a trade last night. Some of you guys may have watched it. hypothetically speaking, she should have filled nicely, but nope, the numbers changed a little bit, so I didn't get what I thought I was going to get. So at least I'm getting something for my money, I'm not losing anything, which is good. And I get the difference between the purchase price and the strike price. It is what it is. All right, now somebody wanted to. Okay, I did the exact same thing that you did with Ford and Kohl's, and when it filled, not so good. Yep, Sheila, it happens. You know, sometimes you hit that button. Favorite dividend stock, Jonathan, would be Macy's this year. This year, Macy's has been very nice to us. Okay, consistently getting 1 to 2% every single week. Where can I watch you do your trading? Well, right here is one in the evening. In the mornings, Monday, Tuesday, Wednesday, Thursday, I have a live trading class that we trade every day at 9 a.m. until you guys are done asking questions. Okay, I stayed on for 2 hours once answering questions. But as soon as you guys done asking questions, hey, we close up for the day. But at 9 a.m. we open up because I want to see what the stocks are going to do before the market opens, do some number crunching, whatnot, and then jump in first thing Monday morning. If you're really interested in that, that would bring you to the 10-minute trader. Okay. The 10-minute trader, here it is right here. The 10minutetrader.com, and the very first page you see right there, the little link says live trading online. If you don't like that, you can always come down here. It says live trading, join our morning trading group, and that will take you right to the Patreon where you sign up. Okay, depending on what level you want to see. Okay, let's get back to where we were. I think that is where I made the mistake. Yeah, usually when you put your trade in the night before, you're susceptible to what the market maker is going to open it up at. And apparently, he didn't like the numbers he put last night, so he came up with some new numbers this morning. Didn't make me a happy camper at all. All right, Derek, you got it. All right, so that was Ford. What else do we want to take a look at? Let's take a look at some of our favorites. Macy's is one of my favorites. All righty. What were the 5 categories that King Aristocrats, Warren Buffett's? Balance is Key 2020. Interesting name. All right, you ready for this? You got a pencil and piece of paper handy? List number 1, the Dividend Kings. 50 years of increased dividends consecutively, year after year after year. That's 5 decades of increased dividends. Okay. List number 2, the Dividend Aristocrats. Okay. List number 3, the Dividend Champions. List number 4, okay, the Dividend Contenders. And list number 5, Warren Buffett's list. That 5 list right there will give you 300 companies that have consistently increased their dividends for more than 20 consecutive years. You can do whatever you want, seriously. But what I look at companies that have consistently increased their dividends, because that means they're consistently profitable. You're either going to be profitable, put your money back into the company for capital growth, great, fine. That's for the younger crowd. I'm 60 years old, I'm retired, my little nest egg is going to last me until the day I depart and go on to the next adventure. That being said, I missed one. How the hell did you miss one? Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. There you go. As I was saying, what the hell was I saying? Well, considering we have a nice big crowd here, lucky Larry, my first trade, got in at Ford 11.16 myself to August 11.50 strike, 10 cents. Let's see how it plays out. Well, alrighty then. How much should a 20-year-old put in his dividend portfolio each month on average? All right, Jonathan, I'm basically going to ask you a simple question. What's your plan? You're 20 years old. You got the rest of your life, dude. Live it up. Have fun. Make plans for your future and consistently increase your contribution to your retirement, because you're going to retire at some point in life, and you have 3 opportunities, three ways in which you are going to retire. One is you're going to age out, which means you get to a certain age and they say, all right, Jonathan, don't bother coming in anymore. You're just too damn old. Okay, maybe they say it with a little bit more tact than that, but that's basically it. You age out means you just can't work anymore. Number two, you walk out. You go to your boss and you say, you can take this job and shove it. I ain't working here no more. You can walk out. Once you get enough money into your little portfolio that makes enough money consistently and safely to cover all your bills, then you can just walk out. You tell your boss, hey, I don't need this aggravation anymore. I'm out of here. Okay, fine. That's number two. Number three, you get toe tagged. Do you know what that means? That means you actually die on the job. And a lot of people actually do die on the job. So it's only three ways to retire. You're going to age out, walk out, or toe tagged out. One or the other. Okay? Now, getting these videos going on over here. So for those guys who don't know, there are 27 people online pretending to be me. I don't know why. I'm really not that fascinating. But that being said, always be leery on who you communicate with. When I always tell people, if you really want to talk to me, send me your number. I will give you a call. It is up to you to then answer the phone when I call. Okay? Now, I'm retired. I don't have a schedule, so don't expect me to say, hey, call me at 9:15. Yeah, it doesn't really work that way. I wake up, I pick up the phone, and I start calling people. That's just the way it works. Okay? Anonymous, just joined. What stock do you recommend for dividends? Ooh, Anonymous, I don't recommend anything. So that being said, let's go over the disclaimers. First and foremost, I'm not a financial advisor. I'm not a stock analyst. I'm not a bookkeeper, tax accountant, lawyer. I'm basically nothing to nobody. I'm the crazy guy who lives down the street that does weird stuff. Okay, that's me. Okay, the only thing I have behind my name is an S and an R. That's because my son is a junior and I am a senior. That's it. I'm a nobody. No college training, no 20, 30 years on Wall Street. Nope. You must be doing something right with 27 imitating you. Yeah, you're absolutely right. I must be. So as I was saying, I'm starting a second channel, The 10-Minute Trader. So if you ever seen any of my videos, they always start the same. Hey, this is James from Dividend Stock Talk, brought to you by The 10-Minute Trader. So the 10-Minute Trader is a totally different strategy than what we're doing right here. That was created for my 9-year-old daughter when she was 9 back in 2008. So I was fortunate enough once I got out of the service back in 81, well, I'm getting old, back in 81 when I got out of the service, is I got hooked up through the Army job placement thing that they had going at the time with a gentleman who taught me what he knew, to build exhibits for museums and aquariums. So I thought to myself, these are cool, but is there any way that we can take them, shrink them down for the home hobbyist? And he said, no, there's no money in it. So I said, okay, fine. So I decided to do it on my own. And granted, lo and behold, there was plenty of money because nobody else was doing it. I scalped SPY puts 3 times this week. Jack, cool. Definitely in the wrong place, dude. I don't do those kind of things. I do safe, predictable, consistent trading. Okay, only with companies that consistently increase their dividends, because absolute worst case scenario, when the stock goes down, I'm going to get continued higher and higher dividends. Pakaris, how are you doing today? EPD. Bodo Glimp. Interesting name. No, hi, hello, how are you doing today? Could you please look at this for me? No, nothing like that, just EPD question mark. So let's put EPD question mark. Enterprise products. Interesting. Okay, I'm going to say no at the moment. The only reason why I'm saying no, I don't know anything about the company, but here's the thing. Look at where it is at the moment. You have some serious resistance at the $30 level. 5 times. 5 times. Check it out. 3004, 3003, 3005, 3004, and again 3003. 5 days within a 2-week period, it wouldn't go past 30. Okay, great. Well, it's at the high. I have nothing to do with it. It's at the high. I'll wait for it to come back down. I'm good. at betting on sports. Is this similar? Not really. Got to give it to you for being so considerate while answering the same old questions over and over again. One of the many reasons I watch and follow. Well, all right, you want to hear the same answers over and over again. All right. Boda limit Norwegian. I have no idea what that means. Can you look at Tesla? Can I look at Tesla? I love looking at Tesla. No, Tesla does not have dividends. They do not share their profits. Why would anybody want to look at Tesla? Especially somebody my age. Okay, now, person my age, don't get me wrong, okay? Tesla's a great company. That boy does a wonderful job at what he's doing. Great. But he doesn't share his profits. So somebody like me who relies on a consistent cash flow to take care of my bills, okay, I don't have a pension. I don't have a 401k. I couldn't do the corporate thing that long. I tried the corporate thing. I lasted maybe 6 months. Something about somebody telling me what to do, where to go, it just bothered me. Okay, so I couldn't do the corporate thing. So I started my own business, okay? Now, with my own business, I put money aside. I made more money than I knew what to do with, had to figure out what to do with it. So my daughter wanted to learn how to trade because, I had to figure out what to do with all that money. Here's the challenge when you're trying to teach a 9-year-old how to trade stocks. It's very challenging because she wasn't a Mensa student, and I'm not quite sure if some of you know what that means. All right, she's not on the honor roll, just a normal, average, everyday 9-year-old girl. So here's the thing. It has to be simple. It has to be safe. It has to be predictable. It has to be consistent. And there's got to be no way that she could lose. What's going to happen if a 9-year-old little girl loses money? Well, she's going to start crying. Guess who's the bad guy? Dad. And then I feel bad. And then what's even worse than that? Yeah, mom comes in, makes me feel even worse, and the couch really ain't. Well, couch is kind of comfortable, but you know what I mean. Okay, so it had to be simple, safe, predictable, consistent, and no way she could possibly lose. So I came up with 5 very simple rules for my 9-year-old daughter. Okay, now you guys are a little bit older, so you guys can incorporate anything you want to, whatever else you want to put into it. But number 1 rule: never buy something you don't want to hold for the long term, because you just might have to. Stocks go up, stocks go down. All right, now plenty of times I bought a stock and it went down. Plenty of times I bought a stock and it goes up. It's a 50-50 shot, and nobody really knows. I like odds and probabilities. I like to have the odds and probabilities in my favor. I do certain things over and over and over again. Okay, I do A, I do B, I do C, I do D, and that's how I look at each and every stock I look at. A certain set of rules. 1, 2, 3, 4, until I get to the point where it says, yeah, that looks like a good buy. So here's the thing. Rule number 1, never buy something you don't want to hold long term. 2, never sell at a loss. 3, make sure it has plenty of increased dividends. Increased dividends means they're profitable, and they're consistently profitable over and over and over again. So I like 20 years of increased dividends. Rule number 4, weekly options. Now, you have a choice, okay? Some companies don't have any options whatsoever. Some companies have only monthly options, which means you can trade them only once a month. Some companies have weekly options, like EPD, weekly options. To 26 July, that's today. 2 August, that's next Friday, okay? 9 August, that's the Friday after. 16 August, that's the Friday after. 23 August, that's the Friday after. And 30 August. Wow, check it out. 5 Fridays this month. Cool. Or next month. Anyway, I like weekly options because it allows me to get a weekly cash flow. And then rule number 5 is make sure the numbers work. And what are the numbers, pray tell, might you ask? Well, first and foremost, we want to look at the stock numbers, because that's, after all, we're buying a stock and then we're selling an option against it called a covered call, one of the safest trading strategies there is. So first thing I'm going to look at, the last traded price. See right up in here? The last traded price. Let me get rid of the option chain. Okay, get rid of the option chain, and then you can see the numbers up on the top. See those numbers up there? Those are the numbers we're going to be looking at. Okay, the last traded price. Well, that's the last trade, just before 4 o'clock this afternoon, before the market closed. The bid, that's what I can sell it for. The ask, that's what I can buy it for. The volume, that's how many shares traded today. The open, what it opened up at today, the high, the low, the close, all those numbers at the very top. That's the first thing we're going to look at. Second thing we're going to look at is the option chain. Okay, this one is in 50-cent increments, so it's 26.50. Hold on a second. Come on. I gotta wait for it to reload. Shooting videos as I'm doing the live podcast. So you can see some of my new videos. They're gonna be from the live podcast. You know, rather than doing that, what do you call it? Those clips. Yeah, I'll just do it here. Press the button, boom, live. There you go. All right, so as I was saying, what the heck was I saying? Holy shit. I forgot what I was saying. Oh, so first thing I want to see is what can I buy it for? Next, that's the stock. Then I come down to the option chain. The option chain, this one in particular, is in 50-cent increments. 26.50, 27, 27.50, 28, 28.50, 29, 29.50, so on and so forth. 50-cent increments. So at this moment in time, at 29.94, Dennis, such as $3 stocks like Siri. Good evening there, Mr. Dennis. We'll take a look at Siri in a little bit. Just hold tight. So the closest strike price for me to sell a covered call, well, it's going to be the 30, because it's at 29.94. So the 30 at this moment in time for next week, okay? How did Dell work out this week? Not good at all, Tom. But we're going to take a look at Dell in a little bit. But Dell did not work out very well this week. It dropped, and it dropped quite a bit. But don't get me wrong, I like Dell. I got no problem with that. We're going to cover Dell in a little bit. But let's get back to this one. EPD, look at the number. If I'm buying it at $29.94 and I'm selling the 30 call strike, I want to get at least 30 cents. Okay? That's not happening. Okay, they're only offering 11 cents. So EPD is going to be a no. Not that I dislike the stock. It's just the numbers aren't right at this time. And it's at some resistance. Okay, see where the top is right now? It's at a 30-day top. It's not going any higher. Okay, so EPD is going to be a no. Sorry. All right, Bunky 999, QBTS. QBTS. I could say no now, or I could pull it up and say no. Okay, usually, if I've never heard of it before, it's going to be a no. Okay, it's a monthly. Okay, I don't like monthlies. The numbers just don't work out. I'm looking for a safe, predictable, consistent 1% per week. You cannot get that with a monthly optionable stock, because monthly optionable stocks only do it once per month. So it's just a no. Sorry about that. Strong Mindset 23. How are you doing? How can I scan for stocks are increasing their dividends? Strong Mindset. Are you ready for this? Hope you got a pencil, piece of paper handy. Dividend Kings. 5 decades of increased dividends. Hey person, how you doing? Dividend Aristocrats. 25 years of increased dividends. Dividend Champions. 25 years of increased dividends. Dividend Contenders. 10 to 24 years of increased dividends. And then, of course, you always have Warren Buffett's list. Those 5 lists right there will give you over 300 companies that have consistently increased their dividends for more than 20 years. That's 2 decades. There's your list right there. Go to Google search, Dividend Kings list 2024, Dividend Aristocrats list 2024, so on and so forth. I like watching you talk about this, how long you've been doing it. I've been investing for over 20 years. I've been doing this particular strategy for the last 15, once I showed it to my daughter. Well, once I created it for my daughter. Okay? I guess that answers that question. Bodo Glimt. Check out EPD dividends. Okay, so see if I can. No. I'm trying to think of a polite way of saying it. Number one, if the numbers don't work, why am I looking at the dividends? Okay? Even if the dividends, you know what? Fuck it. Let's take a look at the dividends. Why the hell not? EPD. Enterprise Product Partner. All right. Dividend yield, right here. The dividend is $2.10 for the year. Okay? So the earnings are $2.10 per share. Okay, fine. That means they have a yield of 7.1%. Now, correct me if I'm wrong here, Bodo. Okay? If I'm showing you how to get a safe, predictable, I'm going to say it a little slower. Safe, predictable, consistent, 1% per week. Why do you think I would possibly be interested in something that pays 7% per year? I'm just curious. And then when we go back to the charts, EPD, all right, and then I look at the $30 or the $29.94, which I'm buying it for, if I was going to buy it Monday morning, and then I sell the $30 strike price against it, I'm getting 11%. If your profit is over 1%, but your contract still has time remaining, you could buy back your position and wait for the expiration. Yes, I could. Okay? But let me finish that with Bodo first. Number one, the dividends aren't that great. All right? $2.10 per share. It is a 7% yield, so I'm putting my money into a stock and I'm getting a 7% yield for the year. Now, if I bought the stock, sold the covered call against it, I'm getting 11 cents. 11 cents on a $30 stock is 0.3%. Why the hell would I want to look at a stock that's 0.3%? I meant for being considerate. I have no idea what that means. All right, Wanda, I have no idea what we're laughing about. Okay, thoughts on UPS? Oh, I like UPS. UPS is on my list. UPS, ooh, and we had a big gap down. I want to see that. So the very first thing I ever want to see is I want to see both the 1-year chart and then I want to see the numbers. Okay, first thing I want to see, the high, the low, where was it, where is it? Is it something I need to take into consideration? Well, the high's up here at 190, really quick. The bottom ways down here at 124. Well, we're currently at 128, so it's somewhere in the middle. Not the high, not the low. Somewhere in the middle. Great. Next, I want to look at what am I buying it for? 129.15. Well, the closest strike price is the 129. And look what it's going for. 153. So if I take the 15 cents that I'm losing, let me explain. If I'm buying it, the purchase price is the ask. Okay. 129.15. All right, and the closest strike price is the 129. So if I buy it at 129.15, I sell it for 129. I'm losing 15 cents. I don't want to do that. So you take that 15 cents and you subtract it from the premium that you're collecting, the 153. Once you take the 17 cents off of there, sorry, the 15 cents. Once you take the 15 cents off of there, now you're looking at 128. Is that right? No, 138. Okay, well, 138 is still more than 1% of 129. Great. Well, there's my 1%. Now I want to take a look at the numbers on the charts. What is the chart telling me? Because stocks go up and they go down. I do not want to buy at a high, okay, and I do not want to buy at a low. There's only a certain place where I want to buy it. So let's take a look. A year ago, UPS is at 183.97. Okay. A couple of days later, is the high for the year at 189.65. Well, great. Okay, last 90 days. 90 days ago, we were at 147. The 90-day high was 153, and the 90-day bottom was on Wednesday. This past Wednesday, it just passed. So today was an update, and yesterday was an update. Perfect opportunity to jump on in. As a matter of fact, I'm going to write UPS down for next week because everything looks absolutely peachy. All right. UPS, and I'm going to circle it because everything is checking out for UPS. We're going to look at the seasonality in a second. Hold on. So the last 30 days, right here, the 26th, 30 days ago, we opened up at 136.48, way over here. And she shoots on up to find a high of the 30-day period. Remember, there can only be one high of the 30-day, and there can only be one bottom of the 30-day period. So the 30-day high was 147.79. And then she has this gap down. I love gap downs, especially on a good stock. And the reason why I love a gap down, see, look at from 146, it gaps all the way down to 128 area. That's going to fill eventually. With UPS, you are buying the stock, selling the covered call options. Absolutely correct. Okay. All right, so as I'm saying, the 30-day high was on the 18th of July. That was what, a couple of weeks ago? Okay, a big drop down. Now this gap is going to fill eventually, especially with a company like UPS. Why not sell put options? A person, I love the thought, really do, and it's great once you perfect it and once you understand and you get a consistent cash flow. Okay, once your consistency has been perfected, then add more options to it. Yeah, so he's talking about doing a cash secured put. Well, great. They're wonderful. They do work, but it's adding another step to the equation. You add another step to the equation, you start losing people. Okay? You are expecting UPS not to drop, so you sell a put. Okay, well, I'm thinking UPS is going to go to the upside. Now, the reason why I say that, well, we have our 30-day high a couple of weeks ago. We have our 30-day bottom 3 days ago, 2 days to the upside. That, to me, isolates a 30-day. Is it right? Person, you are right. Okay? But I don't teach the puts here. Puts are a little bit more confusing than just the call options. The call options are simple, they're easy to understand, and they're easy to implement. And they are the safest trading strategy and the easiest to get approval for. Because you do need to have approval, option approval to trade options. Okay, buying stocks, you just have to be 18. But to buy options, you got to be 18 and then you have to know a little bit. It is what it is. All right, so we are going to look at Siri in a little bit. Big man's coming, Vail. All right, so let's finish up with UPS. So UPS is giving me the percentage I'm looking for. We do have the 30-day bottom isolated 3 days ago. We do have the 2 days to the upside. Great. Monday morning, I'm going to want to take a look at it. If she opens up higher Monday morning, well, of course I'm going to jump in and buy some. Next, I want to take a look at the seasonality. What does this stock normally do this time of year? Now, for those of you that aren't familiar with a seasonality chart, this chart right here, all the way to the left is January 1st, all the way to the right is December 31st. It represents the whole year. The blue line represents the movement for this current year. No, I usually buy anywhere between 500 and 1,000. So the blue line is right here. This is where we are right now, getting close towards the end of July, beginning of August. And you see this area right here, this red line, that represents the last 10-year average movement. 2014, 2015, 2016, 2017, so on and so forth, the last 10 years. That's the average movement. Take a look at this spot right here. This is where we are, this little blue dot, that's today. Gonna click it, drag it to the right. The next couple of weeks, that is undeniably to the upside, okay? Historically speaking, over the last 10-year period, UPS has a tendency to go up. Does that guarantee it's going to go up? No, it does not. It just says on average it goes up. Okay, great. I like that idea. So what do we have going for us? We have going for us this gap down right here, because gaps have a tendency to fill, so that's going to fill eventually. 30-day high was a week ago, 30-day bottom was 3 days ago, 2 days to the upside. Got a big gap here, and it historically goes up this time of year. The trifecta is just going to be the dividends coming up in the next couple of weeks. But I do like UPS. It is on my list. Vail, I don't really think is on my list, because I think it's a monthly. Okay, no, it's not a monthly. 1086. VALE. Ooh, check it out. Vail has a 16% yield. It's a hell of a lot better than that last one we looked at. But what do I really want to look at? I want to look at the consistency of the increased dividends. Because absolute worst case scenario, if I'm looking at a stock and thinking to myself, I may have to hold this long term, I want to make sure long term I'm going to get higher and higher dividends. So worst case scenario, I keep getting paid more and more money. Okay, so Vail goes all the way back to 2002. Not quite 20 years. Well, I mean, that is 20 years. That's 22 years. Well, alrighty then. 22 years. Started out at 6 cents. Okay, and then she goes to 4, 5, 4, 6, 11, 17, 13, 17, 26, 30, 24, 30, 19, 38, 58, 59, 44, 14, 19, 10, 5, 29, 13. Like all over the place. There's no consistency. No consistency whatsoever. Do you ever look at UPS quarterly financials all red? No, I don't look at those. The reason why I don't look at those, I look at buying patterns. All right? I look at, have they consistently increased their dividends? Let's take a look at UPS. Well, Vail's going to be a no. Sorry. UPS. Well, see, this is kind of like what I'm looking for. 2002, 19, 21, 25, 28, 33, 38, 42, 45, 47, 52, 57, 62, 67, 73, 78, 83, 91, 96, 101, 102, 152, 162, 163. Am I missing something here? That is consistently going up every single year. I like UPS. Okay, so let's take a look at the chart for UPS. We already looked at it a minute ago, but apparently someone didn't like what he was seeing. All right. Okay, so UPS a year ago is 189. Bottomed out at 120. What was that? Bottomed out at 124.80. A pattern of increased dividends. Yeah, this is what I look for. Because if they're consistently profitable, that means the dividends will consistently go up. Now, if they're not consistently profitable, if they're not running the company properly, in my humble opinion, well, then the dividends will reflect that. So if the dividends are all over the place and not consistently increasing, Hakuna is here from Dividend. So if the dividends aren't consistently increasing, the company is not consistently profitable. Why the hell would I put my money into it? Now, Vail is a no because the dividends aren't consistent. Okay? That means this year they made money, last year they didn't. Well, what the hell are they going to do that next year? Maybe they will, maybe they won't. But UPS consistently every single year the dividends go higher and higher. So why wouldn't I invest in it? And especially, we got a 30-day high, a big gap, and then a 30-day bottom. Well, what normally happens on 30-day bottoms? So profitability would show up in financials, right? You're absolutely correct. But also what shows up is the consistent increases in the dividends. The financials can hide a lot of stuff, but what you can't hide is the amount of money you share with the investors before reflecting on dividends. Well, dividends get a lot quicker. You can look at the financial report, and the financial report is probably 10, 15, 20, 30, 100 pages. Who knows? But you know how many pages are in a dividend? Well, there's just 2 lines, okay? What was the previous dividend? What is the current dividend? Simple. Stop making it more complicated than it needs to be, okay? If they paid 29 cents a share last year, and this year they're paying 30, well, that's higher dividends. Okay, if the year before was 28, the year before was 27, the year before was 20, okay, it's the consistently increasing. That's all I'm looking for. And then I'm looking for the buying opportunity. Well, I don't want to buy it at a 30-day high, because I don't do that buy it high, wait for it to higher. This is not, by the way, this is not a 30-day bottom. This is a 30-day bottom, a 90-day bottom, a 6-month bottom, a 1-year bottom. I could go back further, but the website I'm using only goes back for 1 year. So it is the bottom of the year. So you're going to make money in the stock market, you're going to buy low and sell high. Well, you can't get any lower than the low of the year. And that was 3 days ago. You got 2 days to the upside. What's going to happen Monday? It's going to be higher or it's going to be lower. It's a 50-50 shot. At this moment in time, if it's higher, well, that's 3 days to the upside from the 30-day bottom. Okay, I like 2 days. Okay, so if Monday comes and she's a little bit higher to 128.83, I'm jumping in. But that's me. You guys got to figure out what works best for you. Whoops. I got to get that video going over there. Come on. Save to drafts, and then we just do another video. Every 10 minutes we're going to do a video. Why the hell not? Whoops. Camera, action, and you're on. There we go. So that's what I'm looking for. Consistent increases in dividends and at least 1%. Okay, so Vail's a no, UPS is a yes. I did good on Disney today. Listen to what you said last night about how to pick. Cool. Hakuna, James, when choosing between 2 alternatives, do you pay attention to the volatility and do you pick the one that has the highest implied volatility? No. Now, don't get me wrong. That's a valid reason and that's a valid question. Hold on 1 second. Trying to watch the up-close view of your screen on another YouTube screen, but it lags a bit. Sorry about that. Audio visual is not my specialty. If I could figure out how to use the software on the computer that I have, I would be using 6 cameras. Okay? So I get 6 cameras, each one is live to somewhere. Okay, this one here is the Facebook, this one's the Instagram, this one's the TikTok, this one's the YouTube, this one's the TikTok on a different channel. I have 2 channels now, okay? And then the one down here is YouTube, which is the live screen. So I get 6 channels going now. You're good. Thanks for the live. Definitely. Okay, so as soon as I figure out how to use the software, then I won't have to do this whole mess here. But I kind of like doing it because it allows me, take a picture of me in front of all the cameras and say, so when my kids get older and they start complaining about the new technology in the next 5 or 10 years, I will basically say, all right, you see this video here? You see me doing this? I don't want to hear no crap. If it can be done, it will be done. Figure it out. Okay? So I'm kind of creating a foundation so for my grandchildren when they inherit the company. Robert, I'm glad you glad you did well on Disney. However, I did not make that suggestion. I just showed you the numbers. Okay? That's a choice that you have to make. Okay, I do need people to understand that and to comprehend and to not think anything other than, does it make sense? Great. Okay, now I just point out the numbers and I just point out the charts. That's all I do. I don't make recommendations. You guys are old enough to figure out, is it right for you? Okay, Wade, what program is this? Oh, Neo. I don't think there really is a program. But what you're looking at behind me, that's Thinkorswim. It's not a program, it is a trading platform where people trade stocks or options or futures. You can actually trade futures on this one. And I think you can do cryptocurrency on this also. Not 100% sure. Wade, you want to take a look at 3M? Now, I did say we are going to look at, what was it? Holy cow. Siri. Yeah, somebody wanted to look at Siri earlier. Yeah, Dennis wanted to look at Siri. So we'll look at Siri next. How come not Interactive Brokers? Well, as far as I know, Interactive Brokers doesn't have a trigger trade. Okay, so 20 years ago, I was looking for a platform that had a trigger trade, which basically means I can do 2 trades at once. I can buy and sell at the exact same time. Well, not the exact same time, but close to it. I don't have to sit in front of my computer. Most platforms, you can do the buy trade, and then after you buy it, you have to come back in and do the sell trade. No. I wanted one where I could do the buy trade, buy it at the market at the open, and then have profit already set to sell it as soon as it filled. So as soon as it filled, the profit will be stuck in there. So that's called a trigger trade, and the only place I found that had it was Thinkorswim. And that was like 20 years ago. And I've been with them ever since because they get everything so cool. They used to have everything, but since Chucky took over, they've taken away some of the fundamental analysis. And it really bothers me that they did that. So let's take a look at 3M. 3M is going to be an automatic no right off the bat, Wade. Terribly sorry. Look at that big, huge jump. If you don't think there's going to be profit taking tomorrow, I have no idea what to tell you. Now it's with Schwab. Yeah, Charles Schwab. That's like I said. When Chucky, Charles Schwab, took over, they took away some of the fundamentals. So some of the fundamentals aren't there anymore, which means I got to go somewhere else to find those answers. Okay, now I don't like doing that. I used to be able to find out every single thing I wanted to know right on Thinkorswim, but now I have to go elsewhere, and that bothers me. So as much as I like 3M, I did buy 3M earlier this year. I'm staying away from this thing. Okay, that gapped up and it kept going up. Okay, now if you're into puts, it's perfect time to buy a put tomorrow morning and Monday morning, because that thing is going to come down. When you have a gap up like that and a movement up like that, yeah, there's going to be profit taking. Why? Well, because people like me, they see a big, huge jump like that from 102 to 127. That's a $25 increase on a $100 stock. That's a 25% increase in one day. Now, there are going to be people that are going to hold on to it, not sell it. Matter of fact, 32 million shares traded today. 32 million shares traded today. Okay, so a lot of people are going to sell and take that profit. So there's no sense even taking a look at it because more than likely, holy cow, I got 99 messages. Oops, I missed all those questions. All the way back to the beginning. Here we go. WBA, Consolidated Edison. All right, J Ball, Consolidated Edison. Great company. However, they only have monthly options. So Consolidated Edison is going to be a no. But they're great if you're okay with monthly options. But I don't like monthly options because, don't get me wrong. Consolidated Edison been in business for over 200 years. 200 years. Okay? That being said, they have monthly options. The numbers just don't work for me. So no, I don't do Consolidated Edison. Am I getting this correct? You sell calls when you expect not to rise. Okay, I didn't see that. Hold on. I think I figured out a way how to do this. Okay. You expect the stock not to rise, but to drop. Not necessarily so. Selling puts. when you expect the stock to rise. No, 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 no. A person, that's not what I was saying. What I was saying is when you see a move like this that happened today on 3M, she jumped from 102 all the way up to 127. That's a 25% increase in one day. What I'm saying is when you see a move like that, more than likely, it's not definite, nothing's ever written in stone, but more than, well, actually, the Ten Commandments were written in stone, weren't they? Okay, anyway, but more than likely there's going to be profit taking come Monday. That's all I'm saying, with something to that effect. What about neodymium? Yeah, I don't know. Usman, never heard of you, can't help you out. Yes, of course, okay. Vail is going to be a no. We already talked about Consolidate, Edison, Walgreens. WBA, I love Walgreens, WBA. All right, now, I caught a lot of flack about this a couple of weeks ago. Okay, now, I've been watching Walgreens all year long. Okay, I've been making a lot of money off of Walgreens. Now, Walgreens has dropped and finally found its bottom of the year. Not bottom of the year, but bottom of a 7-year period. Okay, so I bought Walgreens and I got some flack. Said, why are you buying Walgreens? It keeps tanking. Well, of course it is. Because the current administration doesn't want to prosecute criminals. Okay, you prosecute criminals, they stop stealing stuff. Stop stealing stuff, stores won't have to close. Stores don't close, then they start doing good business again. So anyway, Walgreens finally found its bottom, 719. Now, it's not the bottom of the year, not the bottom of a 90-day period, not the bottom of a 30-day period. My friends, this right here is the bottom of a 7-year period. So you want to buy low and sell high, you can't get any lower than a 7-year low. Okay, now, yeah, she crashed. Look at this big gap. That gap is going to fill eventually. This company's over 100 years old. At 8,700 stores. Yeah, they're closing on 25%. Good. Get rid of the bleeders, get rid of the dead weight, and just stick to the companies. I mean, stick to the stores that are actually creating a profit. Why would you keep a store open that you're losing money on? Fine. Cut it loose. Cut your losses and just concentrate on the stores that are making money. All right. Flacco. EPD. We already looked at EPD twice tonight. We're only into 10:20. We've only been here for not even an hour yet. And I looked at EPD twice. Picaris. Oh, yeah, I wish I had some. Okay. Next. Come on. There we go. All right. So, let's go some more questions. Almost picked up some, didn't check the premiums. I don't do EPD. Thanks, Taz. Not Temez. Vail. Already looked at Vail. Vail's a no. How does one get that platform behind you? It says simulated trading in the upper corner. Well, that one does say simulated trading. But this one don't. And this one don't. So I have 6 different accounts. Okay, this is the one I share with the public because I don't want little people getting their sticky fingers and getting to my account number and all that kind of stuff. Yeah, so yeah, this is the one I do most of my trading from. Owl, never heard of Owl. And how do you get this? You go to thinkorswim.com and you just download it onto your laptop, your desktop, whatever. I don't personally like the online version. The online version is not as good as the downloadable version. It's a lot more perks to it. Owl, never heard of it. Yeah, that's going to be a no. Okay, see it right here where it says monthly. Whoops, monthly options. That means I can only do it 12 times a year. Now, I'm not a brain surgeon, I'm not a mathematician, but I do know that 52 weeklies are better than 12 monthlies. Okay, Ozark. You think 4% is good for OWL. Fine, great, more power to you. Now, I am showing you a trading strategy called covered calls. If your profit's over 1%, would you buy back the portion or wait for it to expire? Lucky Larry, it's all going to depend on the numbers. So when I buy something on a Monday, I know what it is on a Monday. What I don't know is where it's going to be come Friday. So once Friday comes, that's when we take a look at where did we get in? What strike price did we sell? Where is it now? Am I going to profit? Am I going to be called away? Am I going to take this into next week? Is the stock down? Is the stock up? A lot of questions are going to be answered at around 3 o'clock on a Friday that we have no idea what they are on Monday, Tuesday, Wednesday, or Thursday. That's why, all right, if your profit's over 1%, would you buy back your position or wait for it to expire? I'd wait for it to expire. Okay, so when you get to a certain point, all right, I'm 60, I'm at that point, okay, where I feel compelled to share with my brothers and sisters. That's what I'm doing here. I'm sharing with you guys, right? What else comes on? What else comes along at a certain point is your lack for the attraction of money. Money changes its meaning at a certain point in life. I'm at that point in life where I'm not really motivated that much by money, so I plan my time accordingly. All right, I would prefer to hang out with my 4-year-old grandson than sit in front of the computer to make money. Why? Because certain things you can't get back. Okay, money, you can make money anytime you want, but what you can't do is you can't make extra time. Now, could my grandson go to a nursery school and hang out with other kids his age? Or could he hang out with his grandpa and just have some fun? Well, I would prefer he hang out with me and have some fun, save my son and my daughter-in-law a little bit of money. Great, and I have a blast with him. All right, anyway. So once you get to a certain point, money's no longer a factor. So when I jump in on a Monday and I make my 1% on a Monday, great. The only thing I want to do on Tuesday, Wednesday, and Thursday is just to check and see if I'm right or if I'm wrong, if there's anything I need to change. Okay, sometimes I do. Most of the time I don't. But on Friday at 3 o'clock, well, that's where Monday's decision really get answered. On Friday at 3 o'clock, just before the market closes for the week. They've been consistently losing. Well, Flacco, you're absolutely right. Okay? Well, we're not looking at OWL anymore. We were looking at, WBA, Walgreens. You're right. Walgreens was consistently going down. But here's the thing. All right, hold on a second. Don't go anywhere while I do this. There we go. So as the stock is consistently going down, is the company itself changing? Are the facts changing? Well, the fact is the company's over 100 years old. There's other facts as well. We older generation, the baby boomers and the Gen Xers and the silent generation, what's left of them, we're at that point where we're living off of our prescription drugs. Okay, I know a lot of people my age take a fistful of prescription drugs every single day. I don't take any. I refuse. Okay, I'd rather wake up dead one day than take that crap. But that's me. Okay, everybody's different. So you're going to get your prescription drugs in one of 3 places. CVS, there's one in every major city. Walgreens, there's one in every major city. Walmart, there's one in every major city. Okay, so they're not going anywhere. Now, Walgreens kept going down, and it found its bottom because there's what's called a book value. Book value is if you sell off everything the company owns, everything. If the judge comes in and says, sorry, you guys are done, liquidate, pay off your investors. Great. If that happens, right, you're going to get what's called the book value. So if the book value is higher than the purchase price, which at this moment in time it is with Walgreens, well, it's not a losing scenario. And you get to a certain point where the bottom is where the bottom is. You still have to check your blood biomarkers. Just saying, better prevent, okay? Yeah, I'd rather wake up dead. Thank you very much. All right. Let's go. All right. OCIRC, OWL. Now, we're looking at OWL. I'm not quite sure how to explain this to you, but no. That's a no. OWL is a no. Just, yep, there you go, a person. No, no, no. I don't do monthlies. The numbers just don't work. You can't make me nah, 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 yeah. Do you play earnings? No, I do not. Now, Flacco, the reason why I don't pay attention to earnings, I've seen positive earnings where stocks go up. I've seen negative earnings where stocks go down. Cheeseburger, 9,800%. I have no idea what you're talking about. Reminder, you said you're going to get back to my question. Uh-oh. Your question, James, when choosing between two alternatives, that's not a question. And no, I don't even look at implied volatility. The only thing I look at is the consistency of dividend increases and whether or not the numbers work. That's really the only thing I'm looking for. The consistency in increases on the dividends, which means they're consistently profitable. And two, a little flicker here. And two, what do the numbers look like? What am I buying it for? What am I selling it for? Am I making my 1%? And then what's the chart telling me? Okay? Those couple of things I'm looking for. Cheeseburger, I have no idea what you're talking about. Surge, Trump 24, there you go. Okay, what am I missing? Do you usually avoid holding a stock going into earnings, or does it not matter? Earnings usually has nothing to do with the dividend that's already scheduled to be paid out. I'll buy the puts. There you go. You have fun with that. Margin account. Yep, I have a margin account. Their job is to steal for retailers. Okay, could be. I have no idea. How were you using dividends and selling dividends? Wait a minute. How are you using dividends and selling dividends? I'm not quite sure I understand that, but Flacco, let me tell you quickly. Let's get out of here. Let's go here. Let's go there. All right. So here we are, looking at a calendar. So Flacco, this might help you out a little bit. Now, when I say dividend investing for weekly cash flow, I use dividend stocks, specifically those dividend stocks that have consistently increased for 20 years or more. Now, if you do your research, you'll see there's over 9,598 different companies you can invest in at any moment, anytime in the stock market. 9,598. I believe we checked the other day. So out of all those companies, only about 300, okay, which is about 2% of the whole market. 300 of them actually have increased their dividends for 20 years or more and have weekly options. So you take all those companies and you stick them into the calendar for the year. The little green dots you see behind me are EX dividend dates. Let me explain. There's 4 dates you need to remember when you're talking about dividends. One is the announcement date. That's when the company tells you when they're having the dividend. 2 is the EX dividend date. This is the most important one. The last day the stock trades before the dividend is paid out. 3 is the dividend date of record. Whoever owns that stock on the date of record is entitled to the dividend. Now, I had the misunderstanding what prompts you to enter a trade, an incoming dividend, or a sharp drop. The incoming dividend. Always. Sharp drops are nice, but there's no consistency to them. I like consistency. Buying calls still, Algo, I don't buy calls. All right, so as I was saying, the 4 dates: announcement date, EX date, date of record, and payment date. Okay? The first 2 are self-explanatory. The EX date is the important one. These little green dots represent the EX date, the last day the stock trades before the dividend is paid out. So if I want to collect the dividend from Ally, right here, ALLY, if I want to collect this dividend, I've got to buy the stock before the 31st, the 30th, the 29th, the 23rd, the 17th, the 2nd, the 3rd, the 1st, the 5th, any day before the EX dividend date. And then you hold it past the date of record. Okay, whoever owns the stock on the date of record is entitled to the dividend. So, if I like Ally Bank, it has its dividend on the 31st. Well, I'm going to want to buy it 2 weeks before on a Monday, which is the 15th. That's when I want to buy. 2 weeks before on a Monday. So I use the calendar Okay, all these dots represents all the different companies. That's all of them that are paying a dividend this month. Okay, see the top says July 2024. All these companies, look at 30 of them on the July 1st. Tuesday, look at that. There's 9. There's 10. Next day, there's got to be at least 12. Over here, there's got to be at least 4 times 8, 32. Uh-oh, I just got booted off. Friday night, Saturday night, and Sunday night are always tough nights because Thinkorswim is doing their, what do you call it? Updating. They update every week. All right, so we're back live again. So these are all the ones that are paying. I could buy any one of them. But here's the thing. Only 300 make my list. So what does that 300 look like? Hey, this is Warren Buffett's list right here. Okay? American Express, Bristol Myers Squibb, Globe Life, MasterCard, Verizon, AbbVie, Procter & Gamble, Bank Mellon, so on and so forth. Anything on Warren Buffett's list, I never really do too much research on it. If it's good enough for him, it's good enough for me. High implied volatility that doesn't pay higher when you sell the calls. Well, implied volatility does affect the call strike value, okay? But I don't really look at that because that's just another ingredient to make my 9-year-old a little bit more confused. What do you mean by implied volatility? What do you mean by open interest? What do you mean by delta? What do you mean by vega? What do you mean? Yeah, too many questions. Simple, safe, predictable. If I'm buying it at a certain price, if the chart is telling me it's nice time to buy it, if I'm buying at this price and I'm selling at this price and this is what the return I'm getting, that is good enough for me. Don't make it more complicated than it needs to be. But once you get to a certain point, okay, once you get to a certain point and you get this down pat and you're getting your 50% every year, great, fine. Then start adding stuff to it. Okay, look at for the higher implied volatility. You make it an extra point or two. An extra point or two does come to dollar and cents at the end of the year. Me, I don't really worry about it too much. I like to keep things simple. So let's take a look at a couple more questions. But the dip for September. Cheeseburger, no idea. Thank me later. Cheeseburger, no. Albert, what do you think about Tesla? Oh my goodness, really? Riley, Eric wants to take a look at Riley. Riley? Let's take a quick gander at Riley. R-I-L-Y. R-I-L-Y. Try it again. 3 times a charm. Okay, it's going to be a little difficult because Thinkorswim is doing research. Okay, well, waiting for those numbers to fill. They may not fill. Because if they're not going to fill and we're not going to be able to see the numbers, well, how are we going to know whether or not it's a good trade or not? I might as well just answer questions all night long. Anyway. But Riley, let's go to Yahoo Finance and see how often Riley has increased their dividends. 2014, which means they've only had 10 years of dividends. So you think UPS will fill that, then go bullish? Flacco, that's not what I'm saying. Okay, I'm not saying anything. I'm just looking at what the chart says. Gaps have a tendency to fill. No, I didn't forget Surrey. Surrey is on my list. Where do you draw the line when a covered call? Ooh, you need to be a little bit more specific with that question. Where do I draw the line when a covered call? Okay, you need to clarify that just a little bit better, Dennis. All right, so Riley only has 10 years worth of increased dividends. Is that okay? Well, it really depends on you. 3 cents, 6 cents, 3 cents, 25, 16, 13, 12, 16, 12, 30, 16, 8, 26, 50, 65, 35, 25. Does anybody see a pattern here besides me? It's up, it's down, it's up, it's down. Now, it was $1 last year. Now they cut it by 50%. I'm going to say no to Riley right off the top. Why would I want to jump into a company that cuts their dividends 50%? Does that mean they made less money last year than they did this year? Wait a minute. Less money this year than this year? I don't know. It means they're not being profitable. Why would I want to put my money in there? Think about it. All right, let's take a look at Siri real quick. But, Dennis, clarify that question for me real quick, if you could. All right, what do we got? Just follow me, blah, blah, blah. Come on. Yes, but the dip and position yourself for September. All right, Cheeseburger, I get what you're saying. That does kind of make sense for long-term players. I'm not a long-term player. Seriously, I'm not. I buy Monday. I like to be out on Friday. So I'm more interested in the patterns and the numbers as opposed to the dips. Where do you draw the line when covered call commissions eat into the profits? Okay, the covered call commissions really aren't that big. We're going to do a couple in a second. We'll actually do a sample with Siri. That way you can see, because each individual trading platform has their own fees. Now, Thinkorswim does have fees. So does Webull, Robinhood. I use Robinhood also. But 86 is here. Hey, what's happening? Albert. Tesla, no. Okay, Cheeseburger, you think UPS is going to be bearish until September 6th? I'm going to take a look at that because I'm going to disagree with you there for a minute. But before we do that, before I disagree with you on UPS, let's take a look at Siri. Okay, so Siri, first thing I want to see the high, the low, where was it, where is it, all that kind of stuff on the chart. Okay, high, low, where was it, where is it, blah, blah, blah. Then I want to come over here and see what I can buy it for, 376. Great, well the 350 is going for 24 cents a share. That's not going to cut it. Okay, so I really don't like the numbers here. And it's very difficult sometimes to do the numbers, especially after hours, when they have a bunch of NAs on there. Okay, so might have to wait until Monday to see exactly what these numbers look like. But it is what it is. The 4 is going for 8 cents. A $3.76 stock. The $4 strike price is going for 8 cents. That's a 2% trade right there. Now I know 8 cents doesn't sound like a lot, but when you do 100 shares, it's one thing. It's $8. Do 1,000 shares, it's 80. Do 10,000 shares, it's 800. So the more money you have, the more you make, but the rate of return is still going to be the same. Okay, so whether I buy 100 shares, my rate of return is going to be the exact same. All right. All right, so let's do a quick sample trade on Siri. Okay, a year ago we were at $5. Topped the year off in December at 578. Okay, we bottomed out on the 13th of June at 243. Now that's pretty low, 243. Last 30 days, the 26th, there we go. Now, Siri, you can basically tell, look at the resistance up here at 415. Sorry, the video keeps finishing. So every 10 minutes I got to start the video over again. There we go. All right. I don't particularly like Siri at this moment. The reason why I don't like Siri, look at the chart. 30 days ago was the 30-day bottom, okay? And that was $2.63. The 5th of July was the 30-day high, and that was 416. But look at these last 4 dates. On the 16th, 406. The 24th, 412. The 25th, 412. The 26th, today, 402. Yeah, it just doesn't want to seem to let go of that pricing right there where it is. It looks It looks as if it should be coming down. So yesterday was a down day. Today's a down day. Monday will probably establish 3 days in a row if it's going to be another down day at all. You can get it online. It's called Think or Swim. 86, way to go. UPS is bearish. Okay, so I want to touch on that for a second, Mr. Cheeseburger. You think UPS is going to be bearish? Alrighty, so let's take a look at UPS. A year ago, 189.23. Finished up the year at 157. Kind of channeled between 139 and 155. Okay, last 30 days. Well, let's get the last 90 days. Here we go. Okay, last 3 months. She goes sideways for about a month, she drops and goes sideways for about a month, shoots on up, and then pulls back. Okay, so hypothetically speaking, when the 30-day bottom was on Wednesday, see, here's the 30-day bottom right here, Wednesday, 2 days to the upside. At what point, okay, does it become bullish if it is at a year bottom? It's at the bottom of the year right now. Okay, it hasn't been this low all year. So once you get rock bottom, you know, they say it's great to be at rock bottom because there's no other place to go but up. So if there's no place to go but up, how can you call that bearish? And let's take a look at the seasonality chart, because the seasonality chart gives us an idea of how the stock normally moves throughout the year. Okay? So if we look at the seasonality chart to the left is January 1st, to the right is December 31st. The blue line represents to here. So has she been bearish all year? Yes, she has. But what usually happens between June and August? Well, she moves to the upside. Look at the chart. This is 10 years worth of data. From May, where she's at bottom in May, to mid-August, that's definitely to the upside. Then she pulls back, a little bit of a dip, pull back, and then she shoots back up in December. Well, at this time of year, she's in an upward trend. Usually. Vail at 11, stock thought. Big man, we already looked at Vail. Vail is already a no. So I'm not quite sure why you want me to keep looking at Vail. You think if I look at it a second time, a third time, and a fourth time, I'm going to change my mind? Oh, lemon's a lemon no matter which way you look at it. Vail, V-A-L-E. Okay. Number one, look at the seasonality. Seasonality has it going down for the next month and a half. Okay, look at it. For the next 2 months, she's going down. That's Vail. Also, $10.90. The 11 is going for 9 cents. Not quite 1%. But if I looked at the 11, I might be able to squeeze 1% out of it. Let's look at standard chart. Last 30 days. Well, hey, I like the last 30 days. 26 right there. Okay, 30 days ago, we're over here at 11.12. The high of the 30-day period, 11.67, hits it 3 times. The 3rd of July, the 5th of July, and then again on the 9th of July. Slowly drops, finds the 30-day bottom on Wednesday. Great. All of it looks lovely. But you know what doesn't look lovely for Vail? V-A-L-E. What doesn't look lovely for Vail is this right here. The dividends. Okay, they've been paying dividends for 20 years. Paying dividends for 20 years. Great. They started out at 6 cents, and they dropped to 4. Then they dropped to 5. Then they went to 4, then they went to 6, 11, 17, 13, 17, 26, 30, 24. Can you see the numbers, or are you just not seeing them? Okay, when you go from 41-cent dividend, okay, in April 2014, and then you cut it to 14-cent dividend, well, that's not a good sign. And then from 14, you go to 19, and then from 19, you go to 10, and then from 10, you go to 5. Okay, so by 2016, I'm making 5 cents per share. Well, whatever happened to 2012 when I was making 59 cents a share? Okay, sorry, dude. The numbers just don't work. Okay, big man? Okay, the numbers are there. This is why the numbers are here, so you can take a look at them. All right, so if it's going down, why would I punt? You can do whatever you want with your money. This is a big fat no to me. If they're consistently decreasing their dividends, that means their profits are getting smaller and smaller. If their profits are getting smaller and smaller, why the hell would I put my money into a company like that? There are too many other companies that are consistently increasing and consistently profitable. That makes more sense to me. Okay, I honestly, I don't care how wonderful Vail is as a company. They may have the sweetest, nicest people there in the world. But if they're not consistently profitable, I'm not parking my cash there. Terribly sorry. Vail is a no. And if you ask me again, more than likely it's going to be a no again. AGNC. AGNC. Here we go. $10.07. Look at the high, the low, where it was, where it is. Interesting. Where it is. Interesting. 10 bucks. It's going for 11. Take 7 cents off of there. And then you're looking at 4 cents. 4 cents a share off of a $10 stock. Is that right? Hold on. 0.04 divided by 10 bucks. Okay, yeah, that's not even 0.5%. We're going to say no to AGNC this week. Don't get me wrong. I like AGNC. AGNC is on my list. However, not this week. The numbers just don't work. Once you understand the option chain, you'll understand money flow. Wow. I'm glad you told me that. All these years, I thought I was wrong. Interesting. I'd like you to explain to me why I'm wrong, because it seems to be working just fine for me. Once I understand the option chain. Okay, I love it when people say that. Flacco, selling covered calls on dividend stocks 2 weeks before the ex-dividend date. Thanks, 86. What up with AI robots doing this for you? Yeah, I've seen enough Terminator movies. No, thank you. Do you sell the stock before the ex-dividend date? I like to. Doesn't always work that way. Sometimes I take it right into the weekend, right into the dividend date, and I collect the dividends also. I think this year so far, I may have collected 6 dividends or 7 dividends, but it's mostly just premiums. 86, Lou. There are many scammers out there pretending to be me. You can block them. Yep. 86 wants to take a look at Citigroup. I like Citigroup. J-Ball, you asked me already about Consolidated Edison. Okay, when I say Consolidated Edison is a monthly, it's a no. I don't know why you're asking it again. Okay, the company's over 200 years old. Great, fine dandy. At 96, if I buy the 96s, I'm getting $1. Okay, that's about 1%. But I got to carry it for 3 weeks. So that buck is now 33 cents a share. 33 cents a share on a $96 stock. That's 1/3. 1/3 of a percent. Why would I possibly do 1/3 of a percent per week when I can do 1% per week? I'm sorry, I love Consolidated Edison. I really, really do. Unfortunately, they just don't pay. And besides the point, look where they are. Okay? At a 30-day high. Sorry, no. Does option priced on the weekends mean anything? No. Because as soon as the market opens, all these numbers are going to change. Felix, you want to look at Double D. Okay, interesting. The chart, high, low, blah, blah, blah. 89, 80, 49. So we'll be looking at the 80s. 215, that's over 2%. Cool beans. Come on. All right, come on. There we go. All right, so DuPont, we're looking at the current price being $80.18. Oh, great. So I can buy it at $80.49. The closest strike price is going to be the 80, and that's going for $2.15. That is over 2%. Okay? Over 2%. Let's take a look at the numbers. A year ago, 76.57. Bottoms out at 61.14 the beginning of February. Let's look at the last 90 days, because in the last 90 days, we have our high of the year. Check it out. It's really not that difficult to see. Okay, she goes up, she comes down. She goes up, she comes down. She goes up, she comes down. Where is she now? Well, the last 30 days. Let's take a gander. Okay, 30 days ago, we're at 80. Okay, we bottomed out on the 10th of July, shot up a week later on the 17th. Okay, and that was 82.57. Well, from 82.57, she takes 2 weeks to drop and finds a bottom here at 78.94. Today's an up day. I like 2 days to the upside. To the update, look at this. From this high here, look, from the high, she drops. Now she's turning. This is what I tell you guys to look for. Okay, now you guys can do whatever you want, but this is what I'm looking for. I'm looking for it to come off of a high, hit the bottom, turn around, and go back up. Because you're going to make your money in the stock market buying low and selling high. Well, where are you going to find the low? You're going to find the low after it comes off of profit taking. Because as an investor, if I see a stock that I own go from, let's say, 50 to 55, well, that's a 10% increase. If it goes from 50 to 60, well, that's a 20% increase. Okay? Anytime the stock moves up, take your profits. Nobody ever went broke taking profits. And if you don't take your profits, you might lose it. Because what does the stock do? Let's take a gander at what it does. Okay? Take a look. Back in May 2nd, she's at 77. Well, she jumped to 79, drops to 77, jumps to 82, drops to 79, jumps to 82, drops to 78, jumps to 82.50, drops to 79. That's all it does. It goes up, it goes down. You're going to make your money when you buy low and you sell high. Does it really matter how high it goes or how low it goes? Well, kind of does. Anytime you see anything 5% or 10% or 20% or higher, well, yeah, there's going to be a movement. Because you and me, we are the buyers and we are the sellers. Now, I've been doing this for 20 years. I'm not greedy. I'm perfectly happy with 1% per week. So if the stock goes up 1 or 2% and I can get my 1 or 2% and jump on out, well, hell yeah, I'm going to. Because I'm looking for a safe, predictable, consistent 1% per week. I love companies like DuPont, especially when they're coming off of a 30-day high at 82.59. They dropped down to 78.96. That is a $4 drop on $80 stock. That's a 5% drop. Okay, fine. That works for me. All right, so if I'm looking at $80.49 to $80, $22.15, yeah, that's a nice premium, Felix. You did a good pick there, kiddo. Your full screen on YouTube. Thanks. All right, you're welcome. Felix, EL, Estee Lauder. Oh, don't talk to me about Estee Lauder. I bought Estee Lauder months ago, and it's still down. I'm down 10% on Estee Lauder. Is what it is. Anyway, you buy something, it goes up, it goes down, one or the other. Okay? Now, I bought like 15 stocks when I bought Estee Lauder. It's the only one I have left. All right. Is seasonality a custom script on TOS? No, it's not. You can actually look for a seasonality stock chart on Thinkorswim, and you can probably, not on Thinkorswim, on Google. Go to Google and do a search. Seasonality stock chart. They'll probably give you a couple of them they can pick from. IBKR does that right now. Is that international brokers he's talking about, or is he talking about a stock, IBKR? IBKR. Interactive brokers. Yeah, it's a monthly. That's going to be a no. I like interactive brokers. They're the only ones who did cross-margining, and I can almost guarantee 100% of you do not know what cross-margining is. Not very many people did it. That's probably why they got rid of single stock futures. You said you're going to come back to the Instagram question. Okay, well, the Instagram questions I have, Hakuna, well, one was about implied high volatility. Yeah, I already answered that question. Before that, Do I pay attention to the highest implied volatility? Again, I answered that one. Seasonality chart. I want to find that on Think or Swim. I'd have to show you where it is. It's really not that difficult. But other questions on here was one about Siri. We did Siri. Where do you draw the line on covered call commissions eat into your profits? Ooh, we were going to do a trade. Let's do one. I'm going to need another good stock. We got to find another good stock and then we'll do one. I figured that's a no. SCHD, big man. Oh, big man, dude. You know, I don't know you, but I feel bad because what you're showing me so far is less than desirable in my humble opinion. Let me explain to you why I do not like SCHD. SCHD. And this will be like the second or third company you've shown me that's not that good. Number one, it's a monthly. That's number one. Number two, it's at an all-time high. Not all-time high, but it's at a high for the year. Number three, we're actually going over to Yahoo and find out the nitty-gritty on it. Okay? SCHD. Okay, now we come to SCHD. First thing we're going to look at is the dividends. Okay, so the dividend goes all the way back to 2011. Not quite 20 years, but it's what, 13 years of increased dividends? Oh, no, 13 years of dividends, not increased dividends. Listen to the numbers. Are you ready? 2011, 12 cents. 14, 2012. 21, 26. Great, it's going up. Wonderful. 20? Really? We're going down. That's not right. 23, 25, 25, 25, going up. 27, 25, 28, 27, 30, 30, 31, 30, 27, back down again. 30, 32, good, it's going up. 24, back down again. 33, 34, 30, 26, 37, 41, 35, down again. It goes up, it goes down. No consistency with the dividends whatsoever. That's one thing I don't like about them. All right, now, not only that, let's get to the worst part. But wait, if you order now, you even see how much more of a turd this is. All right, so you're going to invest your money into SCHD. They're not continuously profitable because if they were, the dividends would continue to increase, not go up and go down, go up and go down. That's fluctuating. It's not consistent profits. Here's where it gets worse. You ready? You're investing your money and you are collecting 3.6%, not for the week, not for the month, but for the year. 3% for the year. You could do better with a government bond. You could do better with a high yield savings account. You honestly want to tell me to look at SCHD when they're paying 3%? 3.6%, excuse me, 3.64%. Okay, so I'm showing you a way to get a safe, predictable, consistent 1% per week. Now, where I went to school, 1% per week comes to over 50% per year. Yet, you want me to look at this piece of crap. Sorry, I say the same thing about VOO, QQQ, a lot of different companies having ETFs, electronically traded funds, and don't give me that crap as an exchange traded funds because all the exchanges are electronic. It's electronic. You're giving your money to a damn computer to give you 3.6%. Okay? Sorry, big man. You know, 2 of them you've given me so far, both of them are no good. What about waste management? How does that look? I like waste management. Waste management is a good company. It is on my list. But let's see what the numbers look like. Waste management. 196, we're looking at the 197.60s, the 197.50s, not quite 1%. Doesn't make me a happy camper. But take a look at where she was a year ago. A year ago, 150. Okay, last week, 2.25. 150 to 2.25. That's a 50% increase in less than a year. Okay, from October to last week, that's a 50% increase. Well, of course there's going to be profit taken. And hasn't been enough profit taken yet. Look at the chart. You have all the way from 150 to 200. That's empty. There's nothing there. Uh-oh. Did he just say what I think he just said? I think he did. Is O on your list? Well, here's an interesting thing. Okay? You know, do you remember that old nursery rhyme? You better, wait a minute, you better think twice. You better be naughty or nice. Okay, Santa Claus, yeah. He's making a list. He's checking it twice. Yeah, O is on my list. The naughty side. O's big fat no. I'll tell you why O's a big fat no. You ready? Here we go. Monthly. That's number one. There's another reason why O is a big fat no. Okay, here we go. Summary. O. Tra-la-la. 5.5%. Really? You want to put your money into a company that's paying 5.5%. $3.16 per share. You're getting a 5% yield. Yay, yippee. If it works for you, fine. This is not the place for you. Seriously. I'm looking for safe, predictable, consistent 1% per week. Okay? 5% per year? No. On a monthly? Double no. Sorry. Just doesn't work. All right. Let's see what else we got. Is season that okay, we already did that question. Jasmine, how are you? Ideas on Microsoft. Wow, most people don't give me Microsoft to take a look at, MSFT. Most people usually give me garbage to look at. Sorry, just the way it is. All right, Microsoft, 4.25. Look at a year ago, 308. Topped out at 467. That's $159. 159. That's almost a 50% increase from a year ago. So in October, we're at 310. A couple of weeks ago, 466. That's a $150 increase on a $320 stock. That's just below a 50% increase. Look, going to be some profit taking. Well, there was. Look at where we're looking at. Okay, so back in April, 389. She jumps up, a little pullback. Tops off at 468. Let's look at the last 30 days. Okay. If you like Microsoft, it's a good buying opportunity right there. 30 days ago, we're at 455. On the, what is that? What the freaking day is that? On the 5th of July was the high, 468. From there, she drops. We get a not quite a double bottom. Yesterday, 417.51. Today, 417.27. So we have a new 30-day bottom. But ask yourself a question. Do I like Microsoft at this price? Just to let you know, that's a little too pricey for me. Why is that not working? Well, there we go. So Microsoft is just a little too pricey for me. I like my stocks $250 or below. Sorry, I have 53 more questions. Holy cow, it's 11 o'clock already. Where did the day go? Where to find aristocrats with weekly dividends? Wow, interesting question. They don't exist. Okay, I've never seen a company that has weekly dividends. Now, when I say dividend investing for weekly cash flow, you got to listen to the whole paragraph, not just a little smidge. You know, weekly dividend. No, it doesn't work that way. When I say when I say dividend investing for weekly cash flow, what I'm talking about is finding dividend stocks, good dividend stocks that have weekly options. So I can take a look at the dividend stocks, kind of like MasterCard or Visa, Verizon. Okay, MasterCard, that has weekly options. So I can take a look at this, I can buy it, and I can get a weekly cash flow from it by buying the stock, selling the covered call against it until it gets around to paying out its dividend. That's why I usually jump out and say thank you very much. Flacco, what do I think about DraftKings? I think they're a no. They don't have 20 years of increased dividends. Not on my list. Get back to me after another 10 years and I'll take a look at them. Rich Bruner, Who decides if a stock has weekly or monthly options? That would probably be the market maker or the company itself. Do you think 3M will consolidate? I don't think so. 3M earlier this year had to pay off a big lawsuit, I think it was, and then they divided up the company. And get this, after 67 years, you ought to create your own ETF fund. I'm actually in the process of doing that. It's a little bit more complicated than you think, and it's pricey too. What was I saying? Oh, 3M. We were following 3M. After 67 years of increased dividends, they ran into a minor problem where they had to decrease the dividend, and they got kicked off of the Dividend Kings list. Because they used to be a dividend king, okay, consistently increasing the dividends for 67 years. Wow! I would have called all the stockbrokers and everybody in the company, say, hey, if we decrease the dividends, we're going to get kicked off. So what if we all take a pay cut this week so that we can match and at least not get kicked off the list? That would have been a wiser thing to do than to cut the dividends, because now he's got to start from ground zero again. What do I think of Novavax? Ryan, terribly sorry, dude. Never heard of them. Now, I've been investing for over 20 years. If you think that Novavax has 20 years of increased dividends and weekly options, and I just so happen to miss it, well, tell me what the stock symbol is. I'll take a look at it. Just joined. What stock is this? We were just looking at, what the heck were we just looking at? That's a good question. We were just looking at Microsoft. Oh. Sheila, can we look at Verizon? Sheila, we already looked at Verizon earlier today, but we'll look at it again. Oh, look at this, Sheila. It hasn't changed from the first time we looked at it. All right. So a year ago, okay, where's our high, our low, blah, 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 that, fine. $40. The 40's going for 43, just barely giving us our 1%. All right. A year ago, we were at 34.05. We bottomed out at 30.09, and that was back in the beginning of October. We got a double top. Well, our top is here on the 4th of April, and that was 43.42. Look at the movement we have. Drops, goes up, drops, goes up, drops, goes up, drops, goes up. Big gap down. Has a new 30-day bottom, and we have 4 days to the upside, and look at the gap that looks like it's almost all the way filled. Okay, got a little bit more to fill. So I like Verizon. It looks kind of neat. Let's take a look at the last 30 days. Okay, so take a look at the last 30 days. 30 days ago, 41.01, right there. Goes up, pulls back, up, pull back, up, pull back, up. Here's our 30-day high. Boom. 2 days later, our 30-day bottom. 1, 2, 3, 4 days to the upside. Lovely opportunity to jump in. And what is the premium? The premium at $40 is 43 cents. So it's just at 1%. Okay. Do you compile your list from the Dividend? Well, a person, I do it Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and Warren Buffett's list. Those 5 lists where I get mine from. Okay, what do you think of that, Sheila? I like Verizon. Looks like, woo! Before we move on, what does this normally do this time of year? Basically flat. Look at that. Not a lot of movement in Verizon. Okay, no big ups, no big downs, just kind of flat and steady. All right. Next on the list, go some more of these questions here. What do I think about Globe Life? Globe Life, GL. Okay, high, low, where was it, where is it? Look at this big, huge drop, blah, 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 all that kind of nice, neat, fun stuff. Now, Globe Life is on Warren Buffett's list. I really don't check too much on things on Warren Buffett's list because it's good enough for him. He does more research on companies than I ever will. So if it works for him, it works for me. All right, a year ago, 113. We topped out at 132, and that was the end of February. Bottomed out for 11 at 39. Did you hear that? It went from 132 down to 39. That's a freaking huge drop. Now, if you like Globe Life, and is TR on your list, Tootsie Roll? Yeah, but the premiums are horrible for Tootsie Roll. Sorry, it's on my list, but it's a monthly, and the dividends and the premiums are horrible. All right, so she drops to 39 from 130. That's a 70% drop. 70% drop in price. All right, so from there, from the bottom on April 11th to where we are now, okay, she goes from 39 to 90. That is 39 to 90, that's 100. It's like 160, 170% increase in a couple of months. That's a huge move. All right, so look at the 26th right there. Okay, 30 days ago, 83. Bottomed out on the 9th at $80.30. Topped up yesterday at 94.01. Well, more than likely she's going to keep on dropping, in my humble opinion. Okay, so you have your 30-day high here, your 30-day bottom over there. She's already increased almost 170% from its low back in April. Yep, there's going to be profit taking. Now, what does she normally do this time of year? Normally this time of year, we see flat. Okay, go drop a little bit, pull back up. Not any big, huge movements to make any, nothing to write home about. Yawning, sorry about that. When your trade doesn't go through, how do you trade it the following week? Well, it's an interesting question. Let's take a gander. Account statement. Let's get out of there. Let's take a look at AEO. Okay, we're going to take a look at AEO. Okay. So, I haven't, nope, I need to look back more than that. All right. All right, so what do I do? Well, here you go. You ready? I bought AEO April 1st. Hold on, I gotta do this video again. Tra-la-la, come on. It's taking so long to process. And there we go. All right, so we're taking a look at AEO. The red lines represent sell, and the green lines represent buying. So if you take a look and you add them all up, since April, all right, I don't want that one. Hold on a second. I don't want that one. I want trade history. That's what I want right there. Okay, greens are the buy, reds are the sell. Okay, I bought it originally at $25.97, and I sold the 46. That's not quite 2%, but it's very nice. Very next week, I got 5%, 5 cents. Then I got 34 cents. Then I got 4, then I got 7, then I got 24, I got 23, I got 21, 21, 14, 22, 15, 50, 3, 23, 16, 16, 6, 31, 20, 22, 28, 30, and 19. Add them all up together. Those are all the premiums I have collected since I first bought AEO. I bought AEO April 1st. Every single Monday, I would trade a covered call against it. And every single Friday, it never in the money. It was in the money a couple times. I had to buy them back. I lost a little bit, but not huge. But eventually, I will take all these wins and all these losses, add them all up, and see exactly what I'm looking at on AEO. So if I come here to the profit and losses, AEO right here, okay, I am down so far $7,000 on AEO. I'm down $6,500 since the opening. So I'm not selling it anytime soon, because even though it says it's a loss, it's not really a loss until I decide to take the loss. I'm not deciding to take the loss. I'm not going to sell it for less than what I paid for it. It defeats the purpose. Remember rule number 1 and rule number 2? Never buy something you don't want to hold long term. Never sell at a loss. I have no problem holding on to AEO. Is it giving me everything I want? No, it's not. But I refuse to sell and take a loss. I know, it's weird. AOS. Never heard of AOS. AOS. Yeah, that's a monthly. Sorry, AO Smith. No thanks. CMBT. CMBT. I have no idea what that is. That's a no also. All right, did we even finish with Globe Life GL? I don't think so. All right, so yeah, Globe Life is going to be a no only because it's too close to the 30-day high. I would wait a couple of weeks for it to come back down again, see what it looks like. NVAX, Ryan, really? NVAX? NVAX. I never heard of them. 1711. Well, number 1 is going to be a no only because it's at a 30-day high. That's number 1. So let's take a look at NVAX. NVAX and Yahoo Finance to find out they have no dividends, dude. Why the hell would you show me a company that has no dividends on a channel that says dividend investing for weekly cash flow? There's no dividends at all in this company. So NVAX is a no. That's a no. CMBT has insane dividends. Well, alrighty then, Bobby, let's take it. Now, I've never heard of CMBT, but you kind of got me excited, and it's a big fat no. Sorry, dude. I don't care what the dividends are. It has monthly optional. Monthly options. I can only do it 12 times a year. And are they really that good? CMBT. Holy cow. 41% yield? Is that right? Dividends only. Maximum. All right, 15. So they've only been paying out dividends for 9 years. Okay. Started at 29, 62, 82, 55, 22, 6. Going the wrong direction, dude. 6, 29, 81, 47, 9, 3, 3, 3, 110, 70, 80, 57, 457, 115. Dude, they're all over the place. It's a $16 stock, and they're all over the place. Yeah, no, sorry. It's a monthly, number 1. Number 2, the dividends are all over the place. That's a big fat no. I like consistency, predictability, consistency, and safety. Did I put safety in there? Yeah, I did. Simple, safe, predictable, consistent. Yeah, that company has hardly any of that. Bobby, I checked it out. It's a big fat no. Hey, y'all, it's me, Mom. Did 3M help you? No, it didn't. Hopefully Walgreens doesn't turn out like Bed Bath & Beyond. Hey, big man, I'm going to agree with you 100%. But here's the thing. Bed Bath & Beyond didn't have 8,700 stores. DRI. What the heck is DRI? DRI? Darden Restaurants. Yeah, no, it's a monthly. Sorry. AEO's on your list, but it cuts dividends in 22. Yes, I'm well aware of that. Okay? Some companies we let slide because they're on Warren Buffett's list. Hey, James, hope all is well. Insane 47% week for ASTS. Never heard of them. ASTS. Well, definitely interesting. Let's see how many dividends they've actually increased. ASTS. Yeah, no dividends. Sorry. CRWD, yeah, that's a no also. CRWD. No dividends. Why are you guys suggesting me to take a look at companies that don't pay dividends? Do you not see the title of the page? Dividend investing for weekly cash flow? Dividend investing for weekly cash flow. CRWD doesn't have dividends. Okay, neither does ASTS. They would never make my list. So it's a no and then a no. Vail, we already looked at Vail, Nick. It's a no. Why? AA, that's Alcoa. That's a 50-year-old, that's a dividend king. Look at that, 33.45. The 33.50s are going for 86 cents. That's well over 1%. Great, look at the high, look at the low, where it was, where it is, where it's going, blah, 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 all this nice, neat, fun stuff. Cool. 34.85 a year ago. Bottomed out in October at 23. Double top at 45.43 the end of May. From there, she drops, retrace, drops, retrace. Here we have a high over here. That is on the 5th of July. Nothing but down all the way until yesterday's 30-day bottom. Today, she's bouncing off. Okay, great. I like 2 days to the upside. You got a 30-day high, you got a 30-day bottom. What happens next? You get to a certain point where people say, wait a minute, I got all this profit, I'm going to take it. Now, there's a bunch of different people here, okay? Some of you actually want your profits to grow, and you leave it there and say, oh, I hope it goes higher, I hope it goes higher, I hope it goes higher. It doesn't work that way. Stocks go up, stocks go down. That's all they do. If you don't take advantage, if you don't sell it at a high, take your profits and say, thank you, I'll come back to you in a couple of weeks when you drop down again, and then you jump in at the 30-day bottom and you take it back up to a 30-day high. It happened over and over and over again. The charts don't lie. Okay, the numbers don't lie. Okay? A year ago, 36. Whoops. Okay, 36. Dropped to 28. Went back up to 31. Dropped to 25. Back up to 29. Dropped to 23. Back up to 27. Drop to 24. Back up to 27. Drop to, that's all it does. It goes up, it goes down. Sorry, I gotta get this video going again. And there we have it. So the last high, double high, was 45.48. That's the end of May. The last 30 days, right there. 30 days ago, we were at 39.77. We topped out at 43.10. The bottom was yesterday. You're looking for an invitation? This is just about as good as it's going to get. You make your money when you buy low and you sell high. Well, here's your high over here, and she dropped down there. Now, I like jumping in on a Monday, getting out on a Friday. What does that look like? Okay? Thursday was there. Today's right here. What's going to happen Monday? Well, we got 33.43. 33.40 is the bid. 33.45 is the ask. The 33.50 is going for 89 cents. That is well over 2%. I'm writing that one down. All right, UPS is on my list. AA is on my list and circled for next week. Hell yeah. All right, that's just me. So what does Alcoa usually do this time of year? For that, we take a look at seasonality. There we go. All right, so for the next week, she's going to go up, pull back, and she's going to go up again in mid-August. Oh, fine. I'm okay with that. Thanks for the great information and the opportunity. Hey, Cobbler21, you're still here. Can I join the live, Sean? Yes, you can. Now, just to let you know, I am going to cut off at some certain point how many people are on the live in the morning. I don't want too many people there because I want to be able to interact with everyone on a first-time basis. And I do interact with everyone. Do you use a terminal? I have no idea what you mean by a terminal. Look at Ford, good value stock. All right, Moda and Fernie Moda. I already looked at Ford earlier today, so we're not looking at it again. And I have no idea what you mean by do I use a terminal. UPS, a buy now? Well, we looked at UPS. I don't give it advice. I just gave you my opinion of what I thought of UPS. Okay, I don't give any suggestions whatsoever. Now, I tell people to paper trade because you don't want to put any real money into this until you get good with the monopoly money. Okay? Use the monopoly money. There's a lot of companies out there that will allow you to do virtual trading just to see and to check on trading strategies. Now, I've been trading for over 20 years, and I still do paper trading because I come up with trading strategies all the time, and I want to see how well they work. Could you show the process of a trade? Sure, I can. How do I join the live? Well, you join the live by going to the10minutetrader.com. Tra-la-la, the10minutetrader.com. If you do your research on the10minutetrader.com, you'll see that I've owned it for over 20 years. So I've been here for a while. All right. Very first page, the landing page, it says right there, trading live online. You can either click there or you can come down a little bit further, watch a video. And then down here it says live trading, join our morning trading group. And down here, just below that, is view all of my current trades. That will come up here. Here they all are from the beginning of the year all the way up until the current moment. Now, I am double checking the accuracy of the numbers because somebody asked me how do I calculate my profit and loss year to date. Well, basically I take a look at the stocks. Okay, what did I buy? What did I sell? How much did I bring in? How much did I start out with? And then I divide my profit by what I started out with, and that will give me my returns. Okay, so back to where we were. All right, so that's Alcoa. I like Alcoa. Okay, last 30 days. Let's take a gander at it. Here's our high right there. She's dropping down. 30 days. Yeah, we already did this. Okay, so let's move on to the next one. Nay, ooh, Merck. I like Merck, MRK. Here we go, Merck. 125.50. The 125s are going for 291. That's over 1%. The 126s go for 246. That's over 1% also. 86, no, we haven't done C yet. We'll do C next, and that will be the last one. So we're going to do this here, Merck. Then we're going to do C, and then I'm going to answer all the rest of the questions, and that will be it for the day. My throat is starting to get sore, and I don't like that at all. TSLL, wait, I never even heard of it. Okay, so Merck, 125.50. We already know the numbers are working. Great. Let's take a look at the chart. First thing I want to see, the high, the low, where was it, where is it, what direction is it going? Great. A year ago, we were at 107. Bottomed out in October at 98.99. Topped out at 134. 78. That was, I believe, 25th. All right, so 30 days ago was the high of the 30-day period, 133.43. 2 days later, we have our 30-day bottom at 120.87. No real, no real direction here. Sorry, sometimes you get to a point. Your 30-day top is here, your 30-day bottom's here. She goes down, she goes up. She goes down, she goes up. She goes down, she goes up. Okay, now she's coming to the downside. But look at how tight the trades are. Okay, 125, 127, 125, 127, 124 and a half, 126. There's not a lot of movement here. Okay, so if you like Mark, great. Pick a side. I'd pick to the downside. But that's me. Big man's leaving. See you later, Mr. Later Gator. Last one we're going to do is C. All right. I like Citigroup. Citigroup. Yeah, Citigroup's going to be a no. That was quick, wasn't it? Did you see how quick that was? The reason why it's a no, look how close it is to the high. All right, now don't get me wrong. Citigroup is on my list. Okay, I love Citigroup. But look at the last 30 days. All right, 30 days ago, we're down here at 60. She shoots up to 67.50, back down to 63, 2 days to the upside. Great, it's still a little too high for me. Sorry, that's just the way it is for me. Now, at 60.25, the 65s are going for 102. That's over 1%. 66 is not quite there. But it is what it is. 4 more questions. I thought I got TSL from you. It's on my list. TSLL. Really? Hold that second. TSLL. TSLL. That's an ETF. I very rarely do ETFs. Now, I may have done it in one of my, hold on a second, one of my calendar spreads. Can you explain a sell to close, buyback, and roll over strategy a little bit more in depth? Ooh, well, that's a good question. Sell to close. Sell to close. It's a buy to close. No, because we sell to open. Okay, when we buy our stocks, we buy the stocks to open. Okay, and then we sell the covered call, which is sell to open. So to roll forward, you actually have to buy an option back and sell another option against it. So where would that be? Macy's? No. Okay. Let's create a rolling order. Let's find a different one. Okay. So a rolling order, okay, which means I would buy, it must be part of the VIP club. Yeah, calendar spreads are part of the VIP club. Not many people are in that. Buy to close if you want to buy your option back. Yeah, you're right, Wade. So to roll a position, you're actually buying the one that is expiring today. This one I'm looking at right now would be the 22 call for today. And then I would be selling next week's 22. So I'm buying back this one, this week's, and I'm selling next week's. Okay, and then all you do is just confirm and send, and then you read it. Sell 48 calorie calls, blah, 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 whatever. And that's all the numbers right there. Get out of that. Get out of that. So basically, that's how you do it. If you want me to do it in the morning trade, because when you're there in the morning, you want my opinion, Bobby? CMBT. Didn't we already look at CMBT? Okay. Bobby Z wanted my impression of CMBT. All right, CMBT, Bobby, is going to be a no. Flat out, right from the beginning, I'm taking a look at it. It is a monthly optionable stock. What does that mean? That means there's only 12 opportunities per year to make a covered call. That's a no. Thanks, 86. That's a no. Do you create a rolling order much? Not really. Because rolling orders, they get to sit there a little bit longer. Bobby Z, 39% dividend. Bobby Z, you're actually looking at the wrong numbers. Okay, so let's take a look at Yahoo Finance. CMBT. Okay, Bobby, let's take a look at the dividends. Are you ready? Bobby, you looking at this? They've been paying dividends for 9 years. All right, only 9 years. In 2015, the dividend was 29 cents. Okay, then it went to 62. Then it went to 82. Then it dropped to 55. And then from 55, it dropped to 22. Then from 22, it dropped to 6 cents. So you're going from 82 cents dividend to 6 cents dividend. And you think that's a good deal? Okay, it even gets worse because in 2021, it dropped down to 3 cents per share. Okay, now from 2023, it was at 3 cents. Okay, June 2023 went to 110. Then it dropped down to 70 cents. Then it went up to 80 cents. Then it went down to 57 cents. And then in May 2024, this is probably where you're getting the confusion about the dividend. May 2024, it jumped up to $4.57. And then July 2024, it dropped down to 115. So I'm terribly sorry, Bobby. It has no consistency whatsoever with the dividends. That's number one. Now, it does say 41% yield, which I find that really difficult to believe only because of the historical data. Okay? Because the historical data, you really can't argue with that. Okay, 2020, all right, 2020 it was 9 cents. Then they cut it by 60% to 3 cents. Okay, 3 cents of 2021, 2021, 2021, and then in 2022 it went from 3 cents to 6 cents. Okay, then it went back to 3 cents again. Then it jumped to 110, then jumped to all over the place. Terribly sorry, Bobby. It's a big fat no. Sorry, it just doesn't work for me. All right, so hopefully you got your point with that one. Yeah, 86, not that that's not sustainable, it's just not accurate. Okay, so they've had a 3 cent dividend, and then out of the blue, they went to $4.20 dividend. $4.27. That's probably where they get that big, huge rate of return. Not the 3 cent dividend. They're using that $4.27 dividend, which they've only done it once, $4.57. Take a look at the numbers. I mean, they're right there. 3 cents, 3 cents, 6 cents, 3 cents, 3 cents, 3 cents, $1.10, 70, 80, 57, 457, and then the 115. Yeah, I don't see that. Sorry. All right, so it's past 11:30. I'm going to turn it into a pumpkin. Hey, you guys have a great day. Way over, all over the place. Yeah, you noticed that one? Minty Fresh, I haven't heard from you all night, dude. Nice to see you here. 86, have a nice night. All right, so we're over here on Facebook. We are done. See you later. Facebook is, woo. That didn't work out right. But that was done. Wade, good night. Michael David Robinson, you just got here, dude. We're just leaving. All right, that was done. Instagram. Bye, all y'all. You just landed. All right. Sorry, Mike. Talk to you tomorrow.